Our forecast CapEx for the year is expected to be between 4.5 billion rand and 4.8 billion rand, allowing for Eland and the 3-shaft project, as well as provision for the renewable energy program. We present this guidance, as always, as our considered view, and we do wish to highlight that the sector is currently experiencing heightened business risk on a number of fronts. Our view of primary PGM supply is unchanged. We forecast a contraction in the 3 main metals over the coming 2 decades. If, however, we overlay the current economic headwinds on the natural depletion profile, the natural depletion profile is the orange line here, a very different picture emerges. We can reasonably expect earlier closure of marginal mines and the potential to delay projects. This will lead, as you can see, potentially to a dramatic contraction in mine supply should current prices prevail. For palladium, we expect significant pressure on supply and the potential for not insubstantial declines from the middle of the decade if palladium prices remain as they are. And for rhodium, we forecast a similar profile to that of platinum. As many will know, the mainstay of production for rhodium is in fact UG2 on the Western Limb. And these operations are amongst the oldest and highest cost in the industry. They are vulnerable to a low price environment. We anticipate lower production into the future, even if rhodium prices recover somewhat. Based on these curves, supply of PGMs will become increasingly constrained. And if the world truly needs these critical and strategic metals, then the markets must incentivize additional supply from here. If this is not the case, the world's primary production base will rapidly shrink. A combination of global inflation and consequential rising interest rates, together with Russian metal flows into the Chinese market and producer destocking, producers I'm referring to here now are the motor manufacturer, the OEMs, led to a second half drop in our average price received from over 80,000 rand per platinum ounce to 67,000 rand per platinum ounce at the end of the period. Prices have declined further post-year end, and today's spot for Northam hovers around 53,000 rand per platinum ounce. In addition, the fiberglass industry has liquidated rhodium into an already soft market, leading to a fairly extreme price reduction and subsequent negative impact on the basket. This depressed price environment may last for some time. Current pricing will place great stress on the sector. And at Northam, maintaining our position in the lower quartile of the sector cost curve is a business imperative.